We have Alembic Pharma reported a slightly muted set this quarter, led by weakness that we saw in their API business along with the rest of the world business as well. We do have with us Pranav Amin, who's the managing director of the company, joining in. The stock lower by about 1.5% in an otherwise strong market. Thanks a lot, Pranav, for joining in. Just a couple of questions first. US, you had a target of close to around 25 ANDAs to be launched for this year. How many have you launched in the first quarter? What's pending for the remainders? And this quarter saw weakness because of API and the rest of the world business. Where do you see pickup here? And on the back of that, what's your overall prognosis?
Sure, yeah. Good morning. I thought actually it was a pretty good quarter. I think the two large markets that we operate in, the India business and the US business, both had pretty good growth. I think net revenue increased 5%, but between the two of them, the US grew 18% and the India market grew 9%. So those are the two big markets. The API business has been muted, and I said last year that it will be muted for a couple of quarters. This is largely transactionary in nature, and I do believe that the API business, which we've been growing at at least a 10 to 15% CAGR over the last couple of years, will continue that growth by the end of this year. The ROW business has also been like a 25% growth kind of a CAGR for us over the last 5-7 years. And that too is on a good wicket. There's a huge order book. The only reason for this is down is we've just had too many orders, and we just couldn't ship out due to supply constraints. I expect that by the second half of the year, we'll be back to this kind of growth that we've been seeing.
All right. Hi, good morning. Thanks a lot for joining in. On the US business itself, I recall earlier you had said that you were looking to grow in double digits. This time around, you've grown by close to 18%. So what kind of a number should we work with for the year? And also that pricing erosion pressures, that seems to be abating quite a bit.
Yeah, so I'll take the US business. Actually, you also asked me about the launches. We had guided for 20 plus launches in this financial year. I think we're on the track for that. The first quarter, we just did 2 launches, but we did receive 11 approvals. So I think we're on track. I think next quarter we'll launch another 10, 12 products at least, and then we'll catch up by the end of the year. So there's a whole pipeline of launches coming. So that's one aspect of it. Pricing erosion continues to remain in the US market. We do see double-digit erosion in the market. Is it a little better than it was a couple of years back? Yeah, maybe. But of course, we've come off a higher base. So pricing erosion is there. It's just a matter of being there. You have to be compliant. We recently had an FDA audit at our facility, also at our main formulation facility F1, which was passed without any observation. So that is a good sign for us. And in terms of the growth, the last quarter was a good growth in the US market. It was a little lumpy in terms of there were a few exceptional items that we received. We got some orders. But on a steady state, I'd said that we should grow the US business at least 10 to 15% this year.
All right, 10 to 15% for the US business this year, first quarter 18% because of some lumpiness. Pranav, I wanted your thoughts on your animal healthcare business as well. It's a business that has been growing upwards of 20-25% You had guided for that 20-30% sort of range in the next couple of years as well. Are you on track for that? How did that business perform in the first quarter? And what's the prognosis here again?
Yes, absolutely. I think the animal business has been it's a really well-run business for us. I think it's one of the better-run animal health businesses in India. And it's been doing pretty well. If you see, that's got a CAGR of about 28% over the last 5-7 years. Keeping up with that trend, the animal business grew by 23% in this quarter as well. And we hope to keep growing that business. We're adding more products and we're adding more field force on that as well.
So 20 to 30% was your range. For the end of this year, you will be closer to 20 or closer to 30?
Let's see how it goes. I think it's, if you see historically, it's been upwards of 20%. It's been closer, actually over 25. But I think as we go, the base is getting bigger. I hope to grow it at least more than 20%.
We focus a lot on the top line, Pranav. Then now let's get to the profitability. Margins, I recall you telling us that in the next few years, you see that moving to higher double-digit margins and then breaking to the 20% mark. However, in the first quarter, it came up to close to 200 basis points on a sequential basis. For the year, what's the number we should be guiding for? And from year on, do you expect an improvement for the remainder of this year?
Yeah. So we don't give a guidance on our margins for the year, but you're right. I'm quite clear that over the next couple of years, we will see our EBITDA margins, which were down actually more, to go back up to the 18, 19, 20% kind of levels in the next couple of years. And a few reasons why this will happen. One, our R&D spend, which used to be about 14, 15%, is now down at about 7 to 8%. And I think it will stay in that level. Number two is we have a lot of these new facilities, the new capabilities that we've created, which are creating a little bit of a drag on the margins. But as we start ramping these up, which will happen in the next couple of quarters, you'll see an automatic improvement in the EBITDA. Compared to last year, where we had an EBITDA of just, I think, shade under 15 or close to 15%, we'll do much better this year. The first quarter compared to the sequential quarter was lower because Q4 was little lumpy in nature because we had some PLI benefits and some other stuff. But moving forward, the goal is there that we should get to the 18 to 20% EBITDA in the next couple of years.
All right, 18 to 20% by when? Because, I'm looking at a brokerage note and they expect 18% in FY26. Do you think you can outpace that, get to 20% by FY26, FY27?
Well, internally, yes, we'd have we don't give a guidance, but we aspire to have...
No, your internal targets, basically. We're not looking for a guidance for the street.
And Pranav, you have an aspiration, right? We can term it as an aspiration.
Absolutely. Aspiration is always the aspiration. You want to do well. But a few things which are out of our control are the price erosion in the US market and how it pans out. So I think we'd rather grow it consistently and have a more sustainable business rather than a one up, one down.
All right, just a final question before we let you go. The Entresto generic, you had a settlement with the innovator out there. You are hoping for some sort of clarity coming in the next couple of weeks. Just wanted to understand what happens once you get some clarity. Either way, whether you are allowed to launch it or not. We just want to understand both the scenarios here.
So I think, Entresto is one of the bigger launches that is coming up in the market. We will not be in the first wave. We will be there at some point as per the terms of our settlement, which I can't disclose. But it's an interesting market, and we're looking forward to seeing how it pans out. I think the next couple of weeks, next 3-4 weeks, we'll get a lot more clarity how the market's going to go, and we'll decide our strategy based on that.
Okay. All right, Pranav, appreciate you joining in and giving us those details. You're optimistic about growth in various segments, including animal as well as the US business. Margins should be headed towards 18 to 20%. Either in the next few months or the next few years. We'll track that. Appreciate you joining in.